Samurai, Japan. All right, that's my accent. Not super duper. Okay, JP225 USD on Anda, but that is the what is that ticker? It's the Nikkei, NKY. I believe that ticker 225. That's the Japanese index. And I have been looking at this for a little while. Some of the indices, most of them are in stage 4. Some were still remaining in stage 3. And Japan is the one that I thought that was one of the stronger ones. But now this month in December had already triggered me alert. Right here. See those wicks? That's the price action that was there below during that month, during that candle, and I got an alert for that. And I think I posted something on the stock twits and Twitter, but saying to wait for that monthly close, guys. Really important. You need a monthly close below 2183, 21,500, 500 or 21,600. That area. You need a month close below that to have that implied measure move for my classic chart trading framework. Top to bottom. Whoa. Oh, that's pretty cool. And to get that target around the 19,000 level. But until then, sideways move, consolidation in that top pattern. It's here, but you never know. It could go back up here. And even on the monthly, you'd have head and shoulders. Then you have that measure move going downwards, bring you through. You might get some congestion here. So I'm going to put a line out here. And why it's important to set up monthly defined support if you're envisioning a stage 4 decline. Because when we're going to zoom on the weekly, this is going to give you an area of important support where you could expect pullbacks. Sometimes I draw my scribbles and say, Pat, why did you stop? You drew a line down, but why did you make it bounce back up towards previous support and resistance? Well, it's because I think I'm hitting some of that important monthly defined support. The price action could sink through it, but something happens on the smaller time frames when you hit the higher time frames, more defined, more important support and resistance. And then after that, we have some natural support here. So the support starts here, resistance turns support. Then you have the natural support right here that's defined. And what else do we need? And all the way here, you have some more right here. And that's pretty much where you're going to end if that target is reached. Then implied measure move if that's reached. Price action below the 12-month moving average since the highs that were reached right here. So it's been 3 months, 2 months since we haven't had those highs. So that's not too far away. Price action below, back up, below, back up, below, back up. But you also had some wicks above the 12-month moving average, and the price action, the sellers came in. So you see it's starting to act as resistance for those pullbacks. So it pulled back up here, and we'll probably see on the weekly that price action hitting. And then after that, the next month, it's starting to go down. Cool. But remember, what we're trying to identify is a higher trend. And right now, the 12-month average started to decline. And as long as the price action is below, we're going to feel maybe a squeeze here. And then a push. Price action getting pushed down through that support. Or else, well, maybe we're going to get some price action above that 12-month moving average. And then we'll have to wait, reassess until the price action starts going back down, if it does. And if it does, then we know that's going to be our high. Lower highs on the monthly, that's important. That's a significant signal that we're going into downtrend. So now we're just question of waiting, guys. Okay, zoom in weekly. Ichimoku cloud. Look at that. We have a nice cloud below, but right now you're starting to hit it. So that's the difference. That's what hurts when you have pullbacks below 30-week average. That's like your first line of defense. And as long as you're not through the Ichimoku cloud, it's risky. You can't start shorting it now. Price action goes back up, so you're in a stage 3. You have to wait for that weight of evidence, the monthly candle breakdown, monthly chart breakdown, below the 12-month moving average, below 30-week moving average, below weekly defined support, and below the Ichimoku cloud. Weight of evidence. Wait, let it churn. So right now, we're really close. This got my alert even earlier, even on this week. See, you had the price action right super close to the cloud. You're almost out. You have that monthly defined support that's hogging that Ichimoku cloud defined breakdown line. Really close. You're in between. You're getting squeezed by 30-week average. So you gotta wait just a little bit. After that, if ever decides to continue and go down, close below, then this is the problem move. Whoa. And then after that, another test here and see which level of these supports. And then when you hit that monthly target, maybe another pullback and then the way down. Let's remove that. Those are monthly circles, monthly scribbles. Let's make some new weekly scribbles. And here's my 30-week average. The more it goes down, this is a nice entry right here. Back to previous support and resistance. Monthly defined, very powerful. 30-week average. You're below the cloud. So if ever it breaks down, you miss that. Wait for the bounce. Grab it back here, and eventually maybe it's going to go down here, hit that monthly defined support, and then bounce back here. And it's a stage 4 until the price action starts moving sideways, the 30-week average starts flattening, and after that, when it goes out here, you're out, guys. Or higher highs. So here, let's say here, you would have had lower highs, and after that, eventually, price action starts going back up, and then say, oh, higher highs, damn, and then you're out, guys. Standalone sign a whole bunch of provisions to exit. Trendline violation after 3 points, 30-week moving average violation. And if the lows, when the price action starts going back down, your sell stop would be above here, the trader's way, investors above the 30-week average. If the price action went back up above that, then that means the trend is slowing down, going in stage 3, maybe a stage 1, if you're declining back in stage 1, and maybe eventually stage 2. So you don't want to waste your time. You want to ride it when the stage 4 is really confirmed, starting to go down. And after that, you want to exit when it starts going back up. Don't waste your time in stage 3 chop. Don't waste your time in stage 1 consolidation. We're just prepping. We're waiting, getting ready, and you'll be prepared. When the moment comes, you'll be able to jump on it because you know what's the last missing element for that trade to be successful. So right now we recapped pretty much what Japan's breakdown or meltdown levels are. And until we have a close below that 2160, 21,600, this is a push, guys. We just have to wait. See the buyers, they brought it back up. Just have to wait. Question of time. All right? That's it, guys. See ya, Japan. Ciao, guys.